One of the biggest questions we are asked all the time is how do you calculate your take profit? Okay, how do you know when to take your money and run? Okay, that's the question. So we're going to go over that right now using the triple arrow system, but we have an additional tool. It's called the auto Fibonacci levels, and so our auto Fibonacci retracement. Okay, and so we're going to go over that right now. So let's just say hypothetically we're going to enter this trade. That's the NZD USD. So we checked the 30-minute. We saw triple arrows there. We checked 1 to 2 time frames higher. As you can see, triple arrows caught a distance here, but still we still see that it's pulling back to the step. And so we see the crossing of the average here. We see our first volume bar going above. We check one more time frame, and voila, we have triple arrows right here on the 4-hour and a pullback to the second step. First step, second step, like we had discussed in the Stairmaster. Okay, so let's go over that. So let's just say I'm on the 1 hour and I want to set some take profits. Okay, and this will work around any time frame. So you do have an additional tool that is provided to you called the auto Fibonacci retracement. So you can just simply drag that particular tool from your bar, and let me kind of show you this. Let me pull this over so you can kind of see it. I do recommend get 2 screens if possible, and I'll talk about that momentarily. You see, just drag and drop, and there you go. And you can select the inputs and colors and stuff like that. Let me see. I will take this out. The auto rich zones, I don't need that, so I will click that to none. I don't need that color. And you can pick whatever color you want your lines to be right here. Okay, since I'm already using white, I'm going to use the yellow. Okay, so it's going to look kind of confusing on your charts, but once you get it done, you'll see it works perfectly fine. All right, and there we are. And let's slide this back. All right. Let's pull this screen back, and I have mine stretched across 2 screens, and that way, and one of the reasons why is because, see, the closer in, the higher the candles, the further out, the more you can see further back in time exactly what was going on. Okay, so anyway, let's just say that we wanted to enter this trade, okay, and I want to enter multiple positions. Okay, now there's several different ways. You can enter 2 positions like we do with the Nile of the strategy, 1 big position and then 1 small one. Or you can do the Miss Jenny. If you attend her course, you'll see that she talks about the 22, 44, 77, and she has her own take profit methodology. And then we also have a trailing stop. It's up to you. So we're going for newbies. Don't worry about it. You'll learn this as you go. But I'm just going to kind of go over this. So if you wanted to use this, these Fibonacci levels are levels that typically price respects. In other words, if we go back in time on this one, let me go and unlock my screen. My charts by going to charts, auto scroll, and take it off. As you can see here, the last time the triple arrows had came in, here it was triple arrows, and you see price at the first level. And let me do another thing here. Let's take this off. Go to my indicator list, and I'm going to take off temporarily the info plus. This is the info plus. Okay, so I'm going to delete that so we can see clear what's going on. All right. So as you can see here, we had the triple arrows. We had everything line up. Look straight down. Perfect. We entered the trade, right? The first level it hit was the 78.6. You see that? I know it's a little tiny, but it's there. Let me see something. I don't think there's a way for me to make it bigger, but once you add it to your charts, you'll be able to see these levels pretty easily. Let's see inputs and with size. Let's see if I make it a little bit bigger. See if that helps. Not sure if it will, but we'll see. Okay, and we'll get that. Just move this up a little bit so I can go ahead and click OK. See if that helps. But either way it goes, you'll get it. Okay. And there we are. See, it's a little bit thicker. So now we can see it a little bit better. But as you can see on the first descent when it was coming down, and let me take these out too, these white lines. I'm just taking things out. It will look like this when you're adding it. But again, let's move this out just for visualization's sake, okay? So we can see it kind of clear and clean. All right, and now we go. All right, so there we have it. All right, so bottom line is, all right, so now we have our Fibonacci levels. And as you can see, as the price is making its descent, it hit to the first level. See how it just accumulated right here? It just stalled out right here for a little bit at the 78.6. Then it dropped again. Boom. It came here and it hovered in between the two golden numbers, the 61.8 and the 50% retracement level. So as you can see, price came through here, touched down to the 50%, bounced right back up again, retracement. And that's why they call it Fibonacci retracement levels, because of the pull back up in the reverse direction. That's a retracement. That's what term they use, retracement. So it'll pull back up and then it drops it down, and it still respected playing within this level. And then eventually it played around sideways within these two chambers, as you can see, stayed right up in there. And then eventually it broke down to the next level, which was the 38.2. And then it touched down to the next level, eventually breaking through all the way down, and so forth. But as you can see, it respected those levels. Okay, and here it is at the 38.2. As you can see, it touched right to this area and it's accumulating right there. Okay, and now it's showing a what? Reversal. Okay, so anyway, that's the way you can look at this. You can put different take profits, or TPs is another term you'll hear for it. Your stop loss will be up, but your take profits, you can open up multiple positions and have each one to have a separate take profit. Now, what's neat about this is because as you enter the trades, okay, as you enter the trade, so let's just say we're going to enter this trade, okay? Let's just say, for an example, we want to enter this trade for a buy, okay, because we have triple arrow saying up. This is on this. So let's just pull it for sake of argument. So I entered one trade right here. Put my stop loss right there, let's just say, okay? Now, first position, I can make it my largest position, and I can go ahead and move it right on up to the first retracement, okay? And that should give us a 1-to-1. So if our stop loss is about 16 pips, this need to be at least 16 pips or more, and that's 17 pips. So that's a 1-to-1. But sometimes we don't like 1-to-1, because what's the point of that? You're at break even, so you can always put 1 here, or you can move it up to 2-to-1, or right here to the 61.8. Why? Because if it's reversing, what's the next one? It'll go here, and then the next one here. So it's totally up to you. You can have one here to create a 1-to-1 risk ratio. You can have another one here, and then the third position here, and you can actually leave one position, the fourth position, without any pips at all. I'm sorry, without any stop loss at all. Or let me clean that up, without any take profit, because when this protects your account, when you put in a protective order or a stop loss that protects the account in case it goes against you, your TP, so this is called an SL, stop loss. TP represents take profit. That means that's where I want to get out of the market when it moves in my favor. Okay, so if it moves against me, I have my stop loss to protect me. I won't lose everything. But if it does go in my favor, as it's moving up through these levels, I want it to simply climb right on through and take me out each position one at a time. One here, and then I can open up a second position here, or I can open up another one here. Okay, let's look at another one where that happened. Okay, let's open up the Euro Swiss, where we had a magnificent trade on that situation. Let's go to the 4-hour, and you can do this on any time frame. The Fibonacci's will readjust themselves. As you can see, they just popped open to readjust. But let's take a look at the last time. As you can see here, there's that trade that we took, and as you can see, it went first going up the ladder, walked itself up, and you see it stopped right here and went sideways right at the 78.6. Then it went to the next level right here, came up, bounced right back. See that? We're at the 61.8, walked right up to the next one, to the 50, walked up to the next one, 38. And then you have another one that you don't know how far it's going to go, and you just leave without any of this as your take profit. So you have one take profit. And what's neat about this is because if you want to know how to set the take profit, it actually gives you the numbers. First, it gives you the retracement level. As you can see, 78.6, and it's kind of tiny. But again, when you, let me see if I increase this, will that increase the numbers? No, it won't increase the numbers. It'll only increase the candles. But either way it goes. And let's wait for this to pop in order. And there we go. It popped in order. All right. So let's take a look at this. So if we were to look at this here, you'll see it says 78.6 dash. Okay. Dash. Okay. And then whatever that number is, that's what you can put as your take profit. For the 61.8, then you see next to it, it has 1 point whatever that number is. Then the next one is 50%. So you can actually trail and your take profits along the way as it's moving up its pathway. And you can do this on any time frame these work, and they'll auto adjust to whatever time frame you have. So that's one way of doing a take profit. Okay. The other one is like Miss Jeannie does in her trading style, and you can ask her for clarity. I believe she teaches about the 22, 44, 77. In other words, she doesn't use these levels at all. Okay. So what she will do is she'll simply set her take profit by simply setting up if she enters a position, she'll simply set it. And let's go back to the one that we entered. I think it was GU for an example. We didn't enter this one, did we? I thought we did. Let me see which one we entered. Okay, we entered NZD. Okay, NZD USD. NZD USD. Let me go to that one. All right, so right here. So instead, what she would do is she would simply set her take profit. And again, you can ask her when you go into her trading room. So she would set one where it's 22 pips, then set a second position for 44 pips, set a third position for 77 pips, and then have a last one that's running. So either way it goes, her biggest position, I believe that's the way she trades. But again, you can ask her for clarity, is to have the first position the largest one. So once it goes through 22 pips, you got a lot of money locked in the bank, and then your next position is smaller, smaller, smaller. So either way it goes, no matter whether the trade acts a little funky after the 22 pips or the 44, you got two positions locked in when it went through 22 pips and 44 pips and so forth. So let's just say, for an example, right here, if we look at this one, this was one of those trades that she would have entered. This one was 103 pips. I'm sorry, 107 pips. So as you can see, her 22 pips would have been hit, her 44 pips would have been hit, her 77 pips would have been hit, and the last little runner piece would have got taken out at the 100 mark. So either way it goes, you're locking in pips along the way. So this is another way, okay? One last thing I want to show you on this is how to set a trailing stop. In other words, how do I manage to trade if I'm at work or I'm on the road and I don't know what's going on? Very easy. If you go to your entry line, you can hover your mouse over it and then right click and click trailing stop. Now, the way a trailing stop works is you have to look at it as converting points to pips. It's set for points, but you have to set it for pips. And the only difference is whatever number you want to use. So let's just say you want to use a 50 pip trailing stop. So instead of putting in 50 points, you add a 0. And that's pretty much it. And that will give it a 50 pip trailing stop. In other words, as your price is moving up by the 50 pips, your trailing stop is following automatically behind it, so that as price is moving up, it'll continue to follow it. If it pulls back and does a major pullback by 50 pips, it'll tap you out and you're out. You're locked out. Okay? But it manages it automatically. So if I click there, you'll see that this turned yellow, indicating what? The trailing stop is in place, it's active. Okay, that's what it represents. So either way it goes, this is a simple way to manage a trade. So whether you use the Fibonacci levels, you want to use specific take profit numbers, such as I only want 20 pips, 30 pips, or so forth, that's fine. If you want to just put on one major position and have a trailing stop on it, there's many variations of it. And again, you'll be able to learn more about this when you attend our classes, which are on Tuesday, Wednesday, and Thursdays from 8 a.m. to 9:30 a.m. Central Time. And then we also have classes, live trading room classes from 8 p.m. until Jenny dismisses the class on Tuesdays and Wednesdays Central Time. Okay, so anyway, that's how we do our take profits. Have a good day.